Bitcoin is the hurdle rate for innovation. That's kind of what BitBonds are. At the end of the day, you're incorporating the hurdle rate, which in this case, the Bitcoin returns. It doesn't mean in the future we won't have the returns, but when you're using any kind of structure, you're looking for demand and people going, I want to get involved. But you know what? I kind of want to get involved in Bitcoin, but I want to have my principal protected. So give me the chance of making 15%, but protect my principal. So I think this is step one of eventually the United States government figuring a way to do this and tapping the demand that's out there.
What's going on, guys? We've got our weekly episode with Jordi Visser. Jordi's got 30 years of Wall Street experience, and he's bringing it to you fast and furious, exactly what you need to know about what's happened this week and how it's going to affect your portfolio. We get into what's going on at Bitcoin, Bitcoin bonds. Why are countries buying Bitcoin? What is also going on with artificial intelligence, the new VO3 model that just came out, and then how we should be thinking about the tariffs and the ability for the courts to maybe remove them or maybe not. We've got it all covered for you, everything that happened this week and what it's going to do to your portfolio here today. Here's my latest conversation with Jordi Visser. All right, Jordi, I thought a great place to start this conversation is the idea of a BitBond. This bond concept with Bitcoin backing it. We now have the mayor of New York City saying he is going to use this. So this is no longer theory. It's no longer kind of academic, pontificating. We now are saying there's a city who's going to use a BitBond. What is a BitBond? And do you think these are a good idea?
Well, first of all, I think they're a great idea. And that's not just from someone who believes in Bitcoin. We have the merging of two systems. And so, we've talked extensively, not only about what's going on, but I kind of look at the world right now as the old fiat economy that's very industrialized, the digital economy, which has been growing rapidly, doesn't need debt, and then the payment side and using this new capital structure of the new system. So I've always viewed since the day that I kind of embraced Bitcoin as not a currency in any way, shape, or form for me, but really as kind of the idea of a new capital structure. And because you have these separate economies, you have an enormous amount of capital that people want attached to Bitcoin. Michael Saylor's obviously done this extensively. So why shouldn't governments be doing it? As someone who grew up in the financial markets, you're trying to issue structures, whether they're bonds, whether they're equities, whether it doesn't really matter, towards where the demand is. So we've talked about how it's been very difficult for people to sell private equity. There's been IPOs are just not coming through. M&A is still slow. But yet anyone that raises money for anything related to crypto oversubscribed. And that's where the demand is. And so the great thing about capital markets is you start migrating towards where the demand is. Now, the great thing about the bond is on the one side, New York and the whole country has a problem. They need to fund at lower interest rates to be able to deal with the budget problems. And if people are willing to take a lower coupon and get participation in Bitcoin as a way to get higher returns and at the same point are guaranteed their principal, there's going to be demand for that at this point because Bitcoin has such a great track record. And that's the part I don't know. Did you go to the Bitcoin conference? You did.
I did not.
You did not. Okay. So one of my favorite lines, I saw Matt Siegel, who I've known for a long time because he's another TradFi person that went into this route. He wrote about Bitcoin is the hurdle rate for innovation. That's kind of what BitBonds are. At the end of the day, you're incorporating the hurdle rate, which in this case, the Bitcoin returns. It doesn't mean in the future we won't have the returns, but when you're using any kind of structure, you're looking for demand and people going, I want to get involved. But you know what? I kind of want to get involved in Bitcoin, but I want to have my principal protected. So give me the chance of making 15%, but protect my principal. So I think this is step one of eventually the United States government figuring a way to do this and tapping the demand that's out there.
So how will this work? Let's say that I have $100,000. I want to put it into a BitBond. I will be told we will guarantee the return of your $100,000. Mm-hmm. I will be told that maybe I'll get like a 2-3% yield. And then I can get up to 15% return from the performance of Bitcoin over, let's say, 5 years or something. Mm-hmm. When I put the $100,000 in to buy this bond, I obviously get the bond. What do they do with my $100,000? How do they generate the yield, do you think? And then how do they just put it all in Bitcoin, half in Bitcoin? Kind of walk me through what at least we think they'll do as of right now.
Now, again, it depends on the final structuring of how they go through this, but there'll be some sort of participation. And basically there's infinite ways of kind of going through the Bitcoin piece. Let's just do the simple piece. You've got a bond that if they issued it normally, let's say had a coupon, a yield of, let's just use 5%, and it's 10 years. So 5% over 10 years, that's the interest you'd have to pay the person buying it. But instead you go, you're only going to get 1%. That extra 4% a year goes towards, to make it as simple as possible, buying a call option on Bitcoin. Mm-hmm. So you take that money, you go buy a premium of call option on Bitcoin, and let's assume it's an at-the-money call option. As many as you can buy with that excess capital. So what looks like under the hood, the buyer of the bonds has purchased a zero coupon bond that matures in 10 years, or something with a 1% that they're getting the amount that is necessary. They're guaranteed their principal plus 1% a year. The excess dollars that would have gone towards the yield is going towards a Bitcoin call option. So that means that at the end, they have, let's say 90% is the bond portion in cash, principal protected, because it's already on a U.S. Treasury. And then on the other side, they've got a call option on Bitcoin. And that's the way that you can structure them. So you could do it as a call spread. You could do it as an out of the money. There's a variety of ways to do it. But I think these structures are going to become more and more popular after they get done once, twice, 3 times, very similar to the Bitcoin reserves around the globe. You're getting more and more countries, more and more states doing it. As you get more and more people doing it, it's just the nature of how the capital structure is changing.
Companies will do this, countries, cities. Do we think like the banks will do this? Right? Is this just something where we can just go anywhere where debt is being issued? You should expect Bitcoin and debt to be tied together in some sort of bond structure?
I mean, one thing you can always guarantee with the banks, having worked at one, if there's money to be made, they will be selling these out of there. So I don't think it's a question that the banks will get involved in this. Remember, Michael Saylor's doing it to help strategy grow. So he's doing it from a corporate treasury perspective. But he has proven that insurance companies will buy these types of things. It dominates his converts dominate the convertible bond market. You're seeing a merging of these two systems. And that's the thing that I think people just have to embrace is you have the fiat system, and then you have this Bitcoin system, as I'll call it, the crypto world, and they're just migrating together, and stable coins is just another aspect of this in terms of helping.
Now, Strategy has the equity. They have the convertible notes and bonds that people can participate in. But they also have a number of other instruments. I think one is Strike, one is Strife. Mm-hmm. They've got MSTY, which is not theirs, but is involved. How do you look at their fundraising? Are they pioneering different ways to raise capital there? Or are they just taking old instruments that maybe like the Bitcoin world isn't used to and saying, hey, here's, old school playbook for a new school world?
I haven't seen one thing they've done that Wall Street hasn't done in some other form. And I'll just give you an idea. I mean, they've got effectively what are like buy rights. So here, you can buy MicroStrategy and we'll be selling calls against that position. Now, the structure and the way they're doing it is a little bit more modern day. But if I go back to when I first was working at Morgan Stanley, there were things called perks. And those were to help people during the beginning of the internet boom. So in 93, 94, you had a lot of people that wanted to own things like Cisco. And I use Cisco because Cisco's vol was very similar to where Bitcoin's vol was, say, 5 years ago. Meaning Cisco was trading in a 60, 70, 80 vol because the stock was going up 100% a year. And so if you're an income fund and you're like, I want to be part of this, but they don't pay any dividends. So what they did is they created a structure where you buy Cisco, but then there's a strike price. They sell a call option, and that becomes the income portion of this product. Creating a structured product for the buyers is where the creativity comes in. The problem has been until you actually get to the point where you've proven there's demand for this, which is what Michael Saylor really did. He opened the doors for people to realize the demand side. And that's the part that New York City would not be happening without Michael Saylor starting this whole thing and showing that you can do this. Now, his goal was different than New York City's, but he's tapping into demand. So you've seen the demand. Everyone who's out there who's involved on the crypto side is starting to see that there is an insatiable demand. And I think this will spread around the globe. And it already is, but I think this is just the beginning.
And we've also seen a ton of announcements around tokenization. So kind of the flip side, right? Bitcoin is a new thing that is kind of going to the traditional world. But now the people in the Bitcoin and crypto world seem to be saying, well, let's take the old kind of incumbent assets and let's bring them into our world. And so we saw Robinhood recently come out and say that they're trying to get some tokenization stuff done. We've seen Superstate actually partner with a public company to do that. What is your take on this? And is it just a foregone conclusion?
Tokenization is a foregone conclusion. And I remember the first time I saw a presentation on this. I don't know if you've ever had Sandy Call on the on your show. I think she's at Franklin Templeton right now, but she was at Citi at the time, and I attended an event. And I would say this is when I first started to get interested in the blockchain rather than Bitcoin. So this is between 18 and 20, and I went to an event, and she took through her vision of tokenization. So I'm going to say this was 2019, and it was pretty compelling about giving access to investments to all individuals and being able to, from a seller's perspective, being able to sell your house and not have to wait for one buyer because you have a very expensive house and you want to sell it, but actually having people go, you know what, I want to diversify my real estate investments. I'd love to have a little piece of Bergen County, New Jersey, which is one of the places that just said that they're going to start going to tokenization on deeds, which again has implications from a cost perspective for the governments of having all these things in on the blockchain. But then from a seller, it's the ability of increasing demand dramatically because you may not be able to find enough sellers for this stuff. I think this is very important now with what we're seeing with the private equity world. They want to sell some stuff. Okay, well, selling blocks of stuff limits how many buyers there can be. And if everyone knows you're a seller and behind it, there's a lot of sellers, you want to get as much demand as you can. And as retail has proven in the stock market, and this is one of the important things that we've talked about, but I don't think enough people realize the world's changing and retail has a lot more power than people realize. They're investing a lot. They're driving markets on the short-term basis much more so. And they don't have the emotional connections to the fiat system, the historical baggage, I think, that comes along with recessions, and this is going to end badly. And more importantly, it's a phrase that Michael Saylor said that changed my life in terms of thinking about it. It's this thing of, if you're wealthy, you don't need Bitcoin. And if you're not wealthy, you're looking for something to change your life and to be in. And that's why he got involved in it for his business. It's a powerful story. And so I think tokenization, again, fits Donald Trump, what he's trying to do in the country to spread the ability for people below a certain income to be able to invest in the same way that institutions do and the wealthy do. So I view tokenization as another decentralization factor that's very important to the overall distribution of securities in this country.
Speaking of politics and economic policy, huge development this week is the International Trade Court came out and they said, basically, tariffs are illegal. You can't do this in the way that you did it.
You mean a tariff story isn't over?
Yeah, it's not over. And obviously, people went and they looked and they said, okay, it's not 100% of tariffs that fall under this court ruling, but it was a very large portion of them, specifically the reciprocal tariffs. But then there was an appeals court that at the end of the week came out and said, no, you're good. Tariffs are back on. So now we went from the president and the administration being the tariff on, tariff off crowd to now the courts are tariff on, tariff off. And it feels like we're going to the Supreme Court. Like the only way this is going to get settled is go to the highest court in the land. They're going to decide, can the president do this or can they not? What's your take not only on like where that'll end up, but what is the impact on the market that we're still getting on, off on a day-to-day basis? Today's episode is brought to you by Maple, the go-to place for on-chain asset management. There aren't many teams in crypto who manage real money the right way, but Maple does. Maple now manages over $1 billion, combining serious finance experience with DeFi innovation. I use Maple because they make it simple to earn real yield, whether that's allocating stablecoins for over-collateralized lending to institutions, depositing Bitcoin to their institutional Bitcoin yield offering, or accessing their premium DeFi assets like Syrup USDC. If you're serious about putting capital to work, then go to maple.finance to learn more. Once again, that's maple.finance. Go check them out today. Today's episode is brought to you by Core. You can earn yield on your Bitcoin by just holding your Bitcoin. It's simple. Core, the leading Bitcoin scaling solution, will reward you for not selling your Bitcoin. It's not magic. Here's how it works. Core is a protocol secured by elected validators. You can help elect validators and secure the network by simply locking up your Bitcoin on the Bitcoin blockchain. No bridging, no lending, and just holding. When your validator secures core, it earns rewards fueled by network activity and passes them back to you as yield. With a minimum lockup of just 1 day, when the time lock ends, you get your Bitcoin back untouched. Still your keys, still your coins, now your yield. For even higher rates, stake core alongside your Bitcoin and multiply your yield. And if you want to see what your Bitcoin is securing, join millions of others in exploring the largest Bitcoin DeFi ecosystem. There are over 100 live apps in the network and the deepest liquidity in all of Bitcoin DeFi. Get off zero and start earning yield on even just 1% of your Bitcoin by going to stake.coredao.org/pomp. Again, that's stake.coredao.org/pomp, or go click the link in the description. Like, the only way this is going to get settled is go to the highest court in the land. They're going to decide, can the president do this or can they not? What's your take not only on like where that'll end up, but what is the impact on the market that we're still getting on, off on a day-to-day basis?
So the court of the market already decided on this issue when bond rates went up, meaning stocks, bonds, and the currency fell at the same time. And as we said, we haven't seen Peter Navarro much since then. We've seen a lot more of Scott Bessent. So this has already happened. I think rather than go through whether this prevents anything, Donald Trump posted immediately after that, he's on a mission from God. So I think people should just ignore all of the tariff back and forth and just focus on two parts. These are the structural realities. On the one side, you have a country that has a distribution of wealth problem that elected someone because the middle person in this country, the median person, is having a hard time surviving through the inflation that was created post-COVID, and they're angry about it. And even though they have a job, and even though they can go through it, they're realizing for a lot of reasons that they're stuck. And so he's trying to rebalance this a little bit. I don't think that's changing. AI is going to worsen the situation. It's not going to make it better in the short run. In the long run, it will make it better. But people aren't feeling better about maybe living longer, having access to ChatGPT right now. What they care about is their financial situation. So on the one side, I think the thing that's caused the problem, which is the innovation, which is concentrated wealth with very few people, has led to Donald Trump getting elected. And as he said, and Scott Bessent, who's been very, let's just say, cool-headed throughout this whole thing, you have to go back to what he said in November of last year. He wants to be a part of the restructuring that needs to happen of the economic order, the global economic order. The tariff situation is just one part of this. We have a deficit. We have debt. They're going to keep going down this path of finding a way to get more revenues in the country. Tariffs were one way. A weaker currency is already happening. That's another way. And I posted this the second that court ruling came out. My immediate reaction was, if it's not tariffs, it's going to be capital controls. There's going to be a way that the problem that happens in the world where we have trade imbalances, that means we have a capital surplus. And if we have a capital surplus, it means foreigners. So let's just use Europe because he's brought this up. If Europe is being aggressive on our tech companies because we have monopolies over there and we're dominating, so they're putting extra taxes on them, his viewpoint on this could be, okay, fine, then I'm going to put capital controls on your investments here, because on the one side, you guys own these companies as shareholders, and at the same point, you're taxing them. So let's normalize this. You want to take your money out of the country? That's fine. Well, we're going to tax you on the way out since you're taxing revenues going back in. That's a simplistic way to look at it. But I think the reality is people have to remember that trade wars are capital wars. Russell Napier's done extensive good work in terms of talking the history. So I don't think what happened this week changes the short-term ramifications of the market, because I think the market has become, it doesn't care as much about tariffs. But I think what people have to be careful of, again, is that capital controls are more likely on the investment arm if the trade side is going to be illegal.
So this bill, the one big, beautiful bill that has now come out, seems to have two different ramifications. One, it kind of breaches the subject of some of these capital controls, which you're talking about. We'll see if it gets passed, but that definitely would ramp up maybe the abrasiveness or the global competition. The second thing that it does is I think it officially puts the nail in the coffin of cost cutting. It feels like me, I don't know about you, but me, for sure, many people I know were very excited about Doge and the ability to cut government expenses. My general read on this is there's a lot to cut, they're not allowed to cut it. And I did an interview recently with a friend of mine who was one of the Doge engineers at the VA. And he's like, well, we're not allowed to fire anyone. Yeah, we did this thing and I created a better website. Literally, in the first day he was there, he created a better interface for, I think it was like a mobile app or something. And he's like, but then they were like, well, you can't ship that because like there's this one guy who like lives off, in the rural area. He doesn't have internet and like, blah, blah. And he's like, what are we like? Bureaucracy, right? Yeah. Just like the blob at work. And he was like, and I showed them, and he's like, I got like an audience with the secretary because they were like blown away. Like this guy's like knows magic. And he's like, I'm using like off the shelf, AI coding software, prototyping, whatever. He's like, to be honest, it was kind of what I would expect, like a regular engineer to do on any given day at work. The bill does feel like we're regime changing now. And you hear it in the language they're using, but the bill is like, to me, that's like the tablet that came down from on high that says we no longer are trying to cut expenses. We now are going to grow. Is that how you read it?
Yes. And here's why I'll say yes just so quickly. Elon Musk took over Twitter. He was the trigger puller. Everything just happened. There was no bureaucracy. It was just, okay, get rid of this. Can't do that in the government. And, the way the Constitution and everything was written up, it's really, really hard. But when people are trying to get elected or reelected or whatever, and you've got so many of them, it actually makes it a bureaucracy that is almost immovable in a lot of ways to cut anything real. And so I think if you read Elon Musk's tweet, and I don't know if we've talked about this here, so I'm gonna open it up. We've never discussed this. He basically said, "Okay, I got to go back to Tesla because obviously we're not going to do this through cutting expenses." Because he even said the bill's going to increase the deficit, regardless of what the White House is going through. You've got different opinions, but Elon Musk said, "Okay, I got to go back to focusing on productivity." So I'm just going to throw this out to people because I don't think people realize that government spending, let's just take the number of about $6 trillion. Do you realize that half of that is related to health and aging? Half. So Social Security, an aging thing, and then Medicare and Medicaid. So just those alone, you're about at $3 trillion. So if the AI guys are right, and longevity is about to enter the exponential zone, the way that this will eventually be dealt with, in my opinion, is through the health of the country, the productivity that's going to happen through that. So Elon Musk is focused more on the productivity from a humanoids basis, from making the country more efficient, being able to grow GDP without less labor or costs, whatever the case is, and moving the cost of goods closer to zero. So whenever people go, well, there'll be no jobs, in Elon Musk's world, he's like, well, no, you won't have to work because the cost will be going down equivalent to the ability for us to be more productive through humanoids and things like that. But I think the health side, people are going to have to start focusing on, because I do think the Medicare and Medicaid thing, if you made people more healthy, if you eliminated diseases over the course of the next 5 years, and that's not me talking about, this is Demis Hassabis at DeepMind saying, yeah, I think we can get to the point that within 5 years, we'll have the ability to cure diseases at a pace people understand. Dario Modi, same thing, Ray Kurzweil. So I think when people look at this and they look back, for the next 5 years, it's really difficult to take down the deficit. So the pressure on bonds will be there, everything. But for people looking for a hopeful side, I do think if they really analyze this, if we can make people healthier and we can make people live longer, the deficit problem will get much better over time.
If that deficit problem does improve, what is the impact on financial assets?
See, this is a question that I'm going to use Tom Lee as an example. So Tom Lee gets, I think, ridiculed a little too much as a permeable. His long-term structural argument to me is very sound, which is we have a massive labor shortage. And he's talking about millions of people. If you want to go look up again Elon Musk, about every month he puts out a tweet saying, we're going to have a collapse of the civilization if the birth rate doesn't change of the developed worlds, which is true. I mean, we're at a point where the labor force is an issue. And
below the replacement rate.
Yeah. And without immigration in the country, I mean, I've gone through the numbers. We lose about 300,000 people in the labor force. So when everyone's talking about there's going to be a recession, people are going to lose jobs, I'm like, right now we got a problem. We're losing 300,000 people just from the fact that we don't have enough to replace the people that are either retiring or dying off. Like, it's a problem. And so when you get into kind of this theme of, all right, how are we going to deal with it? Tom Lee basically says, we actually need the productivity to be there. So he's calling for massive gains in the stock market, because what he's talking about is replacing the compensation expense size of humans with technology. Not by firing the people, but by the natural, if 300,000 people are coming off a year, instead of needing to go find the people to replace, you're replacing those with robotics and AI agents and productivity, the margins should continue to improve. And that's what we've seen. And I think we're at that moment, because we've talked about inference, that people have to start to focus on the fact that inference is the key change. It's the thing that allows AI to impact. I wrote something for 22V this week on Disney as a company, and just the amount of places that the company is working on AI being integral to their profit margins going forward. And so if you just take Disney as an example and you're like, okay, VO3 comes out, well, that could help reduce the costs of making the movies that they're putting out. They can do personalized ads and things like that. The way Netflix has kind of dominated this stuff through, because they have a lot of the channels. They have these brands that will last forever, and they're handed down from generation to generation. Disney has that ability, but the parks themselves, having humanoids to replace some of the characters, being able to use VR and technology that makes people entertain. There's just so many ways that they can reduce the cost over time. And so instead of firing people, it's a revenue per employee thing that I think is going to happen. So to your question, I think big companies that can afford the AI side, they're going to benefit dramatically in the short run. But I do think the startup world is going to compete with the coding businesses. And the losers in this, unfortunately, are the inefficient, smaller businesses that are sensitive to debt, because I don't think yields are coming down for the near term. And I don't think they have the culture or the money to spend on AI. And so they're kind of in the vice grips of these two forces of higher rates and technology.
So with the VO3, we were looking at it, and I'm fortunate that I have a very expert video analyzer here, Matt. And Matt was showing me things.
It's a nice thing to say about Matt. You never say anything nice about Matt on the air.
Yeah, he
Congratulations, Matt.
There was this director online, and she was pointing out, and Matt and I were pretty blown away. There was a video, and you could see the reflection of a hand in the glass while she was filming. Or there was another part of a video where it actually changed the exposure. So it made, you like the sun is there, it's too bright in the back, and then all of a sudden you can now see the sky. Those are expert level type touches that the AI is able to figure out to make it seem ultra realistic. I was telling you earlier that I remember years ago walking through the streets of New York City and had kind of like this weird epiphany where I was like, none of these people know or understand about Bitcoin. And Bitcoin was at a much lower price. And I was like, oh my God, you just want to shake them, right? And I just thought of the Big Short movie where he's walking around. He's like, nobody knows, right? VO3 to me feels like the same moment where you're like, you saw into the future. Right? Nobody gets this yet. There's a very small group of like terminally online people who are like, whoa. But the rest of the world, they have no clue. And now maybe I can do a big reveal with you here. Today's episode is brought to you by my partner, Bitwise, the global crypto asset manager. Bitwise has $10 billion in client assets, a team of 100 plus people, and more than 30 crypto products to help investors get whatever access they want. They manage the world's largest crypto index fund and a wide range of crypto ETFs. They also manage private alpha strategies, have SMAs for large investors, and are one of the largest institutional Ethereum staking providers. And oh yeah, they've been in the game since 2017. These guys know the space inside and out. So check out Bitwise. Go to bitwiseinvestments.com and see all they've got to offer. That's bitwiseinvestments.com. There are a million ways to access crypto. Explore how you can access it best with Bitwise. And always, of course, carefully consider the extreme risks associated with crypto. What's going on, guys? I hope you're enjoying this episode. Before you continue, I want you to know about a brand new show called From the Desk of Anthony Pompliano. I sit down at my desk every single morning and I explain what I think about current events. It's a great show that hopefully will keep you informed and entertained to a little bit. And so if you go all the way over to the other channel, From the Desk of Anthony Pompliano, on YouTube, Rumble, X, and every other platform, From the Desk of Anthony Pompliano is a show that'll keep you informed about all things financial markets, general business, pop culture, and of course, Bitcoin. I'll see you guys over there. Now let's get back into this episode. Maybe I could do a big reveal with you here. For the last 3 days, I've been running an experiment on X where I have uploaded a photo that is AI generated. The first one was of me and Michael Jordan sitting courtside at the Knicks game. Second one was me and Tom Brady in a golf cart on a golf course. And the third one was me and Tiger Woods at a charity event. More than 50% of people, probably 60% or so if I had to guess, think they're real. This is the worst the technology is going to be.
Yep.
It only gets better from here. And so if you think about that, I didn't say anything in the image. I just posted the image. If we're already at more than 50% of people can't tell on first glance scrolling through a social media feed, what is this going to be like in 10? I mean, this is insane. I actually don't know what all the ramifications are. Do you?
No, I remember the first time I did a podcast on this. By the way, what did you use? I think it's important. Which AI, do you remember what you used?
I think I was playing around with a couple different ones, but I think we ended up using Grok for those three. Okay.
The reason I ask and
by the way, I'm an equal opportunist. I use them all. Because all my friends work at all the different models. So I was like, hey, you better be using I use all the models for all kinds of different things. But that one was Grok.
I use all of them for all different things. And I've been on all of them within the last 24 hours. Okay. Every single one of them. A lot of times I do one and then I have it check in another to make sure that it's actually completely eradicated of hallucinations. So I remember the first time I did something on this, it was an argument for why the blockchain was so important. Meaning, at some point, you need documented proof of what's real and what's not real. And immediately, like you had with NFTs, getting something that has a documented, I created this is what it is. But you're never going to know for sure what people are printing. So the reason I asked what it was is, imagine if people actually did this. My issue with VO3, and I'm gonna take your Bitcoin Big Short moment a different level. I have that every day on Wall Street, still with Bitcoin. You're not in the same group of people that I am. Mm-hmm. It's very hard for me to convince anyone on Wall Street as to why Bitcoin is the purest AI trade, why Bitcoin has a role in the future. Everything that we talk about here, it's not a game. It's actually, you see it from one angle. I came to your side. You know about my world. I know about yours, and we bridge the gap. I don't understand how people don't understand this. So let me bring it to VO3 now. I believe when this thing came out, and when I used it, and I used up all of my monthly allotment in about 5 minutes, and I posted one on X, I immediately started going, this is not only incredible for the reasons you mentioned, how much compute did this take? And I wanted to find out why Google was only letting you do 8 seconds and why you had to be on the $20 a month for the certain amount, finite amount, which I used up in one day, and then the $250 amount. And I asked a question. I said, if enough people used it, because you remember when Ghibli came out and you were kind of playing around with that and you posted something, that's one of the reasons why the token number that Satya Nadella talked about was so high in March. This number, if everyone used, there's not enough GPUs anywhere today. So anyone that was in the DeepSeek moment going, that's it, we're not going to need as many GPUs, got to short NVIDIA. Wrong. Like this inference moment for me, because that's what this is. This is an inference moment. This is the beginning of the gateway to the embodied intelligence side. So this might just be a video, but what people have to understand is the way that this thing is doing things, like literally what you said, creating the lighting and making it's doing thinking and reasoning at a level that cost a lot more. So in token terms, for everyone who's used ChatGPT or Grok and just type something in, On average, for a prompt, you're talking about 30 to 50 tokens. For the 8-second video, not the audio, the video, it's 100 times that. Those are the numbers we're talking about for inference. So when everyone was saying, oh yeah, that's the end, we're at this, the inference numbers are going to go through the roof, because who's not going to make videos? I mean, it was fun. You made some, right?
Mm-hmm.
It's fun to make. Like, you're putting in a prompt and you're creating something and playing around. It's really fun to do.
Yeah, my artist era.
I was telling Matt, I want to do a short, like 15-minute video, pay for the pro, and do 8-second like increments and build a whole short movie out of it. So I just don't think people realize that when you start getting into humanoids and you start getting into full self-driving and you start getting into anything related to the optical side and the inference side, you're just dealing with a lot more compute. We don't have enough GPUs. We don't have enough data centers. We don't have enough power. And that's why with NVIDIA's like stock price, it consolidated for a year while everyone's stressed about this. VO3 to me was the gateway to the next leg of this, with people realizing that the token numbers are just going to explode.
What does that do from a investment standpoint for the Mag 7 versus others? And maybe a way to think about this is like, if I have, money and I want to play AI today, what are my options, right? I can go, there's real estate, kind of REIT type stuff. There's obviously companies like NVIDIA, there's the Mag 7. Like, how do you think about it today?
So semiconductors to me right off the bat, especially since they haven't done anything now for a year. So it wasn't just NVIDIA, it was everything. And then after the DeepSeek moment, everything fell down significantly. I don't think people fully grasp what you need for what VO3 does. And if you put that brain inside a humanoid, the amount of battery needed, the electricity needed, the high bandwidth memory that's needed, the optical semiconductors, you're getting into old school hardware stuff, which has really been left for dead. And in many cases, like Micron Technology is trading below a 10 PE off next year's earnings. And you have a lot of these things out there. The hardware side and the commodity side is a big part. We didn't talk about it, but the nuclear executive orders that were signed last week, with him saying that he wants to have 300 more gigawatts by 2050 of nuclear power. I mean, a gigawatt cost, and this is just using numbers that are probably not including the tariffs, but let's just say on average about $8 billion per gigawatt. So when you're getting into 300 gigawatts, you're talking about $2.5 trillion over the course of the next 25 years. Let's just straight line it. That's $100 billion a year. You have the CapEx already from the hyperscalers going in at $300 billion a year. Like, there's a lot of stuff, and we just changed the bonus depreciation to allow this. Like, I don't think people grasp the GDP impact, the data center side. There's cooling that's needed for this. There's a lot of plays on the AI side. And the problem is for people in the market, if they're looking for other things to change, like, will Ford benefit for this? Well, if the company has a lot of debt and they don't have a benefit from AI and the efficiency side that's going to offset the cost of this, this is really isolated, unfortunately, to the companies that are more geared towards AI. But I think the compute and power needs are the number one place that people should focus on.
When you think of your portfolio, there's been a lot of changes over the last month or so since I've asked you this. What have you changed and what have you doubled down on?
So the semiconductor thing was a big thing for me during the middle of the tariff. So luckily, we ended up being right during the middle of the melee. And, as I've kind of said here, my viewpoint on alpha creation has changed really since 2013, where I view the best alpha opportunities for people sitting at home that are investing money is that when recession fears are very high, it is a great time to start putting money to work. And that's where the dollar cost averaging should start. So when you see the recession fears go up, it should go, because it's just not possible. It's not possible. The old school traditional recession thing's not going to happen. So if we just continue to grow at 4 to 5% of nominal GDP, which is what I think will happen, you usually get good bargains on the artificial intelligence and the more crowded trade. So DeepSeek created the first bit of opportunity, but it wasn't until the recession stuff came up on the tariffs that you had these things selling. I mean, I think Micron got down to about $60. It's around $100 now. And NVIDIA got down somewhere around 80, and it's at 140 as of yesterday. You have to think about those types of returns. Now, NVIDIA is higher than it was the day before DeepSeek, and it's higher than it was the day after DeepSeek. So you could have bought it then, but I think waiting for the recession fears has been up. So that's been the biggest change for me. I obviously also put some money to work in Bitcoin. And what I do is I just harvest some of those and I'll wait for the next recession. I don't think yet we've seen the sentiment come down low enough that I'd be getting out of anything at this point. I still believe we're going to make all-time highs, but at that point, things will change. I did focus a lot more on Bitcoin because I've talked about it here. I do think there is a short squeeze coming in this issue. That's why I'm so fixated on what's going on with Donald Trump's decisions is, number one, it's what he was elected on because of the distribution of wealth problem. So Bitcoin, to me, is number one associated with how do we fix this distribution of wealth problem, not just in the US, but globally. While these guys are all fighting from a government level over tariffs and this and that, that is not the story. The story is the distribution of wealth problem, which will continue to be exacerbated by the artificial intelligence side. Artificial intelligence will help everyone in the country through higher profit margins and stock prices being able to hold up, not having recessions, so people will be able to get jobs. So it's not this horrible thing. If people at home are in that bracket where they're like, I can barely survive, you got to start putting, in my opinion, some money into Bitcoin as kind of the hope side, but also on the belief that as these systems go through this is the way it's going to work out.
I tend to agree. I also think that you and I were on an island when stocks were going down. Now that it has shifted, I do find it fascinating that retail is buying and institutions still are pretty unexposed to this equity rally. And in a weird way, Wall Street's too smart.
That's what it is.
They're looking at all these nuanced data points, all this stuff. I have some friends who work in some of these hedge funds, and I was talking to one of them recently, and he was saying stuff to me, and I literally just looked at him and I said, dude, you're speaking another language right now. I like everything you're saying, I'm sure makes sense, but whatever. Yeah. Let me explain to you how I think the world works. Assets go down, buy, because assets are coming back up. And he was like, yeah, but the Warren Buffett indicator, he was going through the PE ratio. I said, dude, I get all of that. And there are certain stocks that are overvalued versus undervalued, and you can get into the nuanced evaluations. But on a macro basis, bear markets have been outlawed.
Yeah.
And I could just see there was smoke coming out of his ears, right? He was like, what do you mean? Whatever. And I was just like, look, man, I'm just telling you on a broad basis what's happening. And that's why retail's buying.
There was a phrase I heard yesterday on a podcast. And I'll give a shout out to the Forward Guidance podcast. Their weekly one at the end is good. And the reason it's good is because they're rational. But this one guy said, I'm so bearish, I'm bullish. And that line to me is so true because they talk about if it reads this bad, if it seems this bad, somewhere within inside the system, the government is going to print money. That's it. And so when you're a Bitcoin person, you believe that that's the end game, is that the system has been made to make sure that the average voter is not going to be hurt. And that average voter stops Doge.
Yep.
That average voter stops job losses. It's just the way it is.
Where can we send people to find you on the internet?
People can reach out to me in VisserLabs. I'm doing a lot more work on there directly for people to help them with AI and transitioning on it. Some people on the Bitcoin side. And then 22V Securities now on their website. I do a lot of deep dive research on there for them. And then they can find me on X and YouTube. Next time I want to make sure we talk about quantum. If there's one thing that I'm sick of dealing with people scared of Bitcoin, it's that quantum is coming.
Make sure you're subscribed to the channel for next Saturday. Talk to you guys next week.